58. We're going to get started in 2 minutes, 12 o'clock Eastern time. Is it daylight savings or standard time? I don't know. I think it's daylight savings, but it's 2 minutes. Anisha, hello again. Good to see you as usual. John, good morning. I believe that the YouTube folks are going to be joining us shortly. Shriya, I say your name differently every time. I apologize. Sisira is one way to say it. So I'm going to go with that. Or Sishira. I'll go with Sishira. Anyway, thank you for coming. Darylyn, good morning. Thanks for forgiving me. We're going to get started in a minute now. Thanks for being here. We have not really limited on time today, so we could feel free to explore whatever we want to explore going forward here. Joseph, hello. No PowerPoint for this one. I know no one's sad about that. Nilton, how are you? Thanks for being here today. Gold morning. Gold is down 36. No, yeah, today. Wow. Ranjan, good morning. Pre-recorded. I'm not sure what Evernub is referring to. Evernub, this is not pre-recorded. This is live. My name is Jim Cagnina, as you can see on the screen right there. Milton is from Guatemala. Awesome. Trading Typhonian. Yo, yo, yo. I love the name. Thanks for being here. Joseph, hello. All right, let's jump into this thing. My name is Jim Cagnina with NinjaTrader. And for those of you who don't know me, I'm the Senior Education and Trading Specialist for the NinjaTrader platform. Today's event, Futures Trading 101. Before we get started here, I do want to remind everybody that trading futures, options on futures, involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that equation could be that equation can result in opportunities, it also results in risk. So be careful. Only fund your future trading account with risk capital. My personal definition is money I could afford to lose, doesn't change my lifestyle, doesn't lengthen my retirement horizon, and doesn't overly anger Mrs. Cagnina. Now that third part's a little tongue-in-cheek, but stress in life does matter, and you want to be in a good spot. I know when I'm under stress, I make bad decisions and do things I shouldn't do. So be in a good spot. Stress is important. Slow your roll on the day trade margins, and we'll talk about that as we go forward here. I'm really going to do this. Most of this presentation, I'm going to tell the story through the trading platform itself. This is the NinjaTrader trading platform, and if you're brand new to futures trading, this might look complicated, but it's really simple. It's really not. It's uncomplicated. It's very powerful. It's a very easy tool to use to express your opinion in the futures markets, whether you'd like to go long in a market or go short in the market. So we're going to really focus on that most of the time. All right, so let's get started. Colombia. Jorge, thank you for coming. Awesome. Thanks for being here. All right, so I've been around for a while, and I started in the futures business in the early 80s. Might have been the late 70s, probably the early 80s. I don't remember, but I was literally working on the floor of the Chicago Board of Trade. This is 1981-ish, something like that. And I was in the U.S. Treasury bond futures pit, which was the biggest pit in the world, right? There's no internet, there was no online trading. There was none of that. And the only way that a retail trader could participate is, number one, if they even knew the market existed. Number two, they opened up an account with a brokerage firm and subscribed to some sort of newsletter, some kind of news service to get some charts and some data. And then they would call in trades to the broker. And the broker would pick up the phone, take the trade, write it down on a card, timestamp the card, call the floor. The floor had a series of desks next to it, and your broker would call the desk clerk up and say, "Hey, my customer wants to buy the E-mini S&P at 46.98," and the guy on the phone or the gal on the phone would write that down, hand it to a runner, which was me, and I would grab the piece of that order. I'd run it over to the pit, and I'd give it to the clerk that's standing in the pit, and he would pass it back over to the broker behind him, who would execute the trade. Then once the trade was executed, the broker would write it down on the card. He'd flip the card back over to his clerk, who would give it to me, and I'd run it back to the desk. The desk would then call the broker, and then the broker would call you. And sometimes this happened in a couple of minutes, and sometimes this happened in several hours, right? You don't know if you're filled, you know what price you got filled, and it was not the most efficient process. So this was the way business was done, right? And it wasn't really, sorry about that. It wasn't really helpful for retail traders. Couldn't really participate, right? And but then things started to change a little bit. In 1982, the CME launches the S&P 500 index. 1992, the first electronic futures trades are made on CME Globex's electronic trading platform. And that's the same platform that all of these trades here are made on the trading platform through the CME Group electronic trading platform. Now it's obviously more efficient, faster, stronger, better now, but that started in 1992. Still not a lot of retail participation. And then in the late 90s, we started getting AOL connections. Remember that? Maybe in the mid 90s. And we were able to access the internet. Now we could start getting information from the internet. And in 1997, the CME launches the E-mini stock index futures, the E-mini S&P as an example. And so now the universe has expanded, right? We have retail traders that, if you had an online connection and a brokerage firm that had an online trading platform, now you could start trading online, right? And the E-mini S&P also was a smaller size contract. So the capital that you needed to open an account would have been less than what you would have needed to open an account to trade the larger size pit traded contract. It was electronic. It was a fair and transparent exchange. Trades are processed on a first come, first served basis, or FIFO. And then online trading got popular. And in 2002, CME goes public. 2007, they merged with the Chicago Board of Trade. 2008, they acquire NYMEX. And then something really revolutionary happened in 2019, which pretty much made retail futures trading accessible to anybody in the world. The CME Group created a micro E-mini S&P, a contract that's 1/10 the size of the classic E-mini S&P. I'll refer to it as the classic E-mini S&P. And so now you could fund an account with hundreds of dollars instead of thousands of dollars. Electronically, internet access is universally pretty good, quick, fast. Data speeds are measured in milliseconds. So is transaction server speeds, and this is a recent thing. So now the micro product suite is growing at the CME Group right now, and it's an exciting thing because we could participate regardless of pretty much how much capital we want to contribute to an account. In the CME Group's overall notional value on all their asset classes is really big. So having said all that as a brief introduction, Daniel, if you have NinjaTrader open, it'd be great. You don't have to. I'm going to talk about these windows here. This is the control panel. So when you first launch your NinjaTrader software, you're going to get this control panel. And it doesn't look like much, right? But it is, right? It does a lot of stuff, right? There's a new button up here where you could launch charts, you could launch trading ladders, you could launch quote boards, hot lists, all sorts of stuff. There's tools where you could help manage the markets that you want to trade, as an example. There's workspaces. We could create as many different workspaces as we want and save them, whatever the layout is, however we'd like it. And then connections, this is how you connect to a data feed. In my case, I'm connected to Kinetic real-time data feed. I have my simulated account up on the screen right now with a real-time data feed, playback connection, and all sorts of good stuff. At the bottom, there's tabs that shows my orders. I have no orders, my executions, my strategies, my positions, and my accounts. So right now I have 2 accounts here. We're going to focus on the top account. It's excuse me. Hang on one second. Apologize for that. I apologize for my sniffles. I am COVID positive as of yesterday. This really feels like a cold at this point. Headache, cold, chills, fevers, that kind of thing. Occasional cough. So I apologize for that. I'll try to be cognizant of not doing that in the microphone. And so just to catch up on questions, Bowen's asked, can you show us the NQ? I'll show you the MNQ. There's the MNQ. Now, what I have going right, let's go, clockwise, I guess. So we have the trading ladder here. This is a trading ladder. We're going to talk about that in detail. We have a market analyzer, which I'm kind of using as a quote board, and it shows all the different asset classes. We'll go through all that. And then I have one chart on my screen. Now I have a multi-monitor setup, so I have other charts off of the presentation view for today. And you can kind of customize your layout however you want. And that's one of the real nice points about NinjaTrader is depending on your screen size, the amount of screens you have, or maybe you're trading on a laptop, you could easily configure your workspace in a way that gives you the best management process based on your setup. And so this is just how I have mine set up. So I just have one component of each just to kind of make it easier to talk about. I do have an outline. I'm totally not going to follow my outline. I'm just going to go through the platform right now. We'll talk about thank you, Margaret. I appreciate that. I feel fine. I'm just tired and achy. And this is my last presentation of the week. So I think I'm gonna muscle through it. We'll be in good shape. But thank you for that. That's very kind. Okay, so this is the NASDAQ. I have these things all linked together. So if I click on a market on my quote board, then everything changes. The trading ladder changes to show that market. The charts change to show that market. Now, let's take a look at the Superdome. This is a NinjaTrader Superdome, or this is also referred to as a trading ladder or a direct access level 2 view. You might be familiar with that. And I have the E-mini S&P market. This is one of the more popular retail trading markets, and I consider myself a retail trader, so there's no offense in that. And this is very popular. We have over 1 million contracts traded. Look at over on the right-hand side here. It's a very busy day. Over 1 million contracts traded already. And remember, you trade contracts and futures instead of shares, right? And most traders will liquidate positions before the contract expires. So the idea that you're going to go home with something you don't want is very rarely, if hardly ever, a thing for us, because we can easily, with the click of a mouse, liquidate a position or reestablish a position anytime we want. But the trading ladder here is really where the rubber meets the road, right? And this is unique to futures trading. This is when we say future CME Group futures markets are transparent. A trader in Chicago sees the exact same pricing, same ladder, same bids, same offers as a trader in Charlotte, North Carolina, or in Los Angeles, or in Japan, or in Italy, or in the UK, or wherever you're at in this world, Colombia, Guatemala. You will see this same picture that I'm seeing right now. And not only that, from a transparency point of view, when I place an order, it's placed on a first come, first served basis. I don't have priority over anybody else, and nobody has priority over me. It's FIFO, just like your accounting. If you remember your accounting class, first in, first out. So Drew, this is all right. So Drew asked a question, a little bit of an advanced question, but that's okay. Let's talk about it. Is there a way to see the full limit order book on the Dome? Best wishes for speedy recovery. Thanks for that second part. So right now, this trading ladder, and let me kind of explain what he's talking about. We have the prices in the middle, right? And yellow signifies the last traded price. This is the last price buyer and seller agreed to do a deal. Now they didn't call each other on the phone. They were matched electronically at the CME Group's electronic marketplace, and so that's the last traded price. On the left-hand side, you'll see a bunch of numbers: 13, 50, 74, 79, 83, and those represent limit orders that were sent to the exchange to buy contracts. We're on the buy side now at different prices below the last traded price, and it's 10 ticks deep. There's 10 ticks worth of this volume that you see, and each one of these price increments is 1 tick, or the smallest increment that this market can trade in. There's no in between these numbers, and so for this classic E-mini S&P, the dollar value of each tick increment is $12.50, and since it's traded in quarters, the point value is $50. Alternatively, on the right-hand side, you'll see 29, 55, 62, 66, 63. And I've frozen my dome right now by putting my mouse in the middle, all the way up here to 84. And this shows limit orders that are sent to the exchange to sell contracts at those various prices. So if the market goes up here to say 47.01, then transactions will start occurring here, and there's 63 folks that would like to sell contracts there. So that's the definition of limit orders and the bids and offers in the book. And in this particular market, the highest bid and the lowest offer is very tight. That's the bid-ask spread, and it's only 1 tick apart. That means it's a liquid market. It's very tight, and that there's no gap between the bid-ask spread. It's $12.50. It's 1 tick between the bid-ask spread right now. Now, this is almost always the case in the E-mini S&P. You might see really slow in the middle of the night kind of thing where it's a little different than that, but usually not. I'm going to move my mouse around. And you can see these numbers are changing, right? The bids and asks are changing, and it's fluent. People are adding limit orders, they're canceling limit orders, replacing orders to other prices. And so there's this dynamic kind of battle going on right now. Now, the question that was asked is could we see, Drew asked, is there any way to see all of the bids and offers? We show them 10 ticks deep, right? What about this 11th one or 12th one or 13th one? For sure, there are orders in the book up there, but you can only see the top 10 in this view. And I would argue for most of for our purposes anyway, for retail trade purposes, that might even be too much information, right? Because things move so fast. This literally just moves so fast. It's hard for me to, even after 40 years, to assimilate that information in a way to give me some good trade ideas. So the answer to your question is, unfortunately, no. You only get 10, but 10 should be enough, I hope. Keep my fingers crossed. So that's the answer here. Loftus says, after a huge bear run, bulls are picking up some cheap stocks. All right, we'll talk about that later. So John says, so what would be buying a contract at that price shown? So what would we be buying a contract at that price? So, all right, so if order entry is simple. There, you could do a market order, right? So let me freeze this again. So if I wanted to buy an E-mini S&P at the market, right? If I just want to go market order, the definition of that type of trade is I want to buy at the best price available, right? And the best price available is 1 tick above the bid or the lowest offer at 47.01. So a market offer in this case I would buy a contract on the offer, right? Because that's the lowest price someone's willing to sell it to me right now. That's what market order is. The other way to place orders are limit orders, as an example. And let's just do a limit order here. Let's say I'm at 47 even. I'd like to buy a contract. I'm going to click once, right? I just clicked once, and I have and then I got filled, right? The market came down to me, and I got filled at that particular price. And everything's mimicked on the chart. So there's where my price is. That's where my position is. I'm green, +1. Green means long, in other words, that we bought one, right? Our position is +1 or +1, and then our P&L, we're up 50s, 2 ticks, 3 ticks, 2 ticks, or a half a point or 3/4 of a point. And that information is also mimicked down here on the bottom of the trading ladder. It shows I have it set for P&L. We're up $25 right now. We're up $12.50. Now we're even. It's 0. So as this moves around, Mark to market are unrealized P&L, which you see up at the top here, $50 minus, this is saying, hey, if you liquidate at this price right now, here's how much money you're going to make or lose. That's what unrealized P&L means. And so right now the trade's going against us, right? We're down 87, now we're down $100. Now this is the classic E-mini S&P, and I do want to remind everybody that there's a micro E-mini S&P, which is the exact same basis as the classic, except the contracts and tick sizes are 1/10 the size. So this $100 would have been $10 if it was a micro instead of a classic. See, Big Cap Adon says, hi, is there a way to see only the totals of the 10? Well, what you could do, you could add some columns here to this particular trading ladder, and we could show volume here and P. Let's show them both. Let's show volume, and I'll show P&L. I'm going to select them on the available section, highlight them. I'm going to click add, and it'll bring it down here. And then I'm going to hit apply and OK. And what this is going to do, it's going to expand my trading ladder view to include a P&L column, which tells me, hey, if I get out at any of these prices, here's how much the P&L is going to, what my P&L would be, right? So right now, if I get out here, I can see it going across, I would lose $62.50, right? So I just added that information. Now, this blue area here just shows the volume of contracts that are traded at that given price throughout the day, a cumulative volume throughout the day. And again, I could go ahead and edit that a little bit better. Click on volume. And then here is my options to add things. And I'm going to click on show volume text, right? I'm going to click on that, hit apply, and then it's going to refresh the data, and it should show me the actual volume numbers in each price. And again, cumulative through the day. So I don't know if this answers your exact question, but this is what you could do on the trading ladder. Adrian says, is it possible that if the price is in take profit, the stop loss is automatically deleted? Well, so yes and no. There's automated trading strategies that you could customize for your trades to do similar things to what you want to do. And it's not, again, not very complicated. You could say, hey, if we're in the green up here by 4 ticks, then I want to move my stop to break even, as an example. Or I want to liquidate my position and I want to take profit if the price is up here. You know, those kind of things you could easily do. Now I'm going to kind of focus on manual ways to do it. And let's kind of look at the chart here to kind of make it a little bit graphically easier to represent. Okay, so right now my position is here at that particular price at 47 even. Market's going against me, right? This market's going against me right now. So I want to add some more trades. I want to have a stop loss, right? And in this case, I'm going to say, hey, if the market goes down to a certain level, I'm going to concede that it was a bad trade idea and I'm going to lose money, but I don't want this thing to run away from me. And you know, I want to control to the extent that I can, where, you know, my losses. So I'm going to put a stop loss in right here, and let's just go ahead and add it at that level, right? And I just did it. I just right clicked on the chart. It gave me that mini menu. I'll show you it again. Alternatively, hey, if I wanted to, you know, I think I want to put a profit target in here right now. So I'm going to right click on my chart. You could do this from the trading ladder, or you could do this from the chart, like I'm telling you. And I'm going to say, all right, I want to do a sell limit order, right? So now one of two things could happen, right? The market could appreciate up to my profit target, in which case I would sell a contract. and I would make, the difference between where I bought it and where I sold it, right? I bought low, sold high. Alternatively, if the market goes down to my stop loss, then I'm going to go ahead and sell a contract down there. Again, creating a flat position, right? So my +1 position now is 0 because this would add a -1 to it, and I would have lost money on the trade. So this is the anatomy of pretty much every trade you'll make in the world. I mean, you might have multi-target profits. You might be doing 2 or 3 contracts at a time, all of those things. But sure, but there's always a profit target, and best practice to have a stop loss in. Now, don't do this exact trade at home, guys. I just threw this up as an example. So don't think, oh, Jim's got a good trade going on, I'm going to do this. There was no science behind what I just did. Missile silo like range bars. There's plenty. You could create a range bar chart with NinjaTrader. Absolutely. So Daniel, the best way to go about that, and I'll kind of slow down a little bit. I apologize for that. The best way to go about that is if you, excuse me, you can sign up for a free account, free 14-day real-time trial, and then you'll have assistance on how to get started, and plenty of resources on how to actually place trades and all of that stuff. Okay, I'm going to go back and simplify my dome a little bit. So I'm going to right click. I'm going to go back to columns. I'm going to remove the volume, and I'm going to remove the profit loss. Hit apply and OK. Okay, and now I'm going to squish this back to where it was. Okay, so there we are. So now the market. So this gray box here was where my position's from. This is where I bought a contract. This yellow is where the market's trading at right now. You can see it's below it, so it's not good, but it's okay. We're going to be patient and wait. Hang on, let me try to pick up the questions here a little bit. Thank you. So if we bought it at 47 even and a quarter, did we pay 47? No. Okay. So let's take a look up at my. I started with $5,000 in the sim account, right? And my day trade margin, or the intraday margin that I had to allocate, was $500 for this position, right? And this money doesn't get transferred anywhere. It's in your account. It's part of your 5,000, but it's just kind of set aside, saying, okay, he's using $500 or she's using $500 of day trade margin to place this trade. And so my excess margin is my cash value minus my intraday margin, right? And then minus my P&L. And so now my excess intraday margin is $4,487. So in theory, I could go ahead and buy another contract if I wanted, because I have plenty of day trade margin left available. Intraday margins. This is initial margin. This is overnight margin set by the exchange. And that's just if you're going to position trade and hold a position for a long period of time, overnight or longer, and it requires capital of $12,650. And you can see my excess is negative. I don't have enough in this account to do that, right? And most of us don't do that. Most of us will liquidate positions maybe within a couple of minutes, maybe within a day, maybe within 4 hours, depending on whatever your trade strategy is. So now the market's going our way. And you can see the P&L is green here, which is good. And we're approaching our target, our target. Now, one strategy some people might decide to use is, hey, I want to move my stop up to make it tighter. So now that we're in the money here, I could move this up a little bit. I'll just place it right above where I entered, and I just grabbed it and I moved it up. You could do the same thing. You could do the same thing on the trading ladder. Just click on it and move it down, or click on it and move it up. It's really easy to do. Okay, so the whole trade management stuff is click and click, or just drag if you're using the chart. Now, how much do you pay for this trade? Well, you didn't pay anything for the trade. I mean, you're using $500 of your margin, and then when you liquidate your position, then this day trade margin is immediately available. And this is something unique. You don't have to have a pattern day trade account for that to happen, right? So let's just, as an example here, let's go ahead and try to get out of the trade. Bring this down to this kind of level here, and I could kind of tighten my stop a little bit more. All right, so I got filled on a profit target. I'm going to cancel my stop. And so that was, successful. Again, this is a sim account. Keep that in mind. $200 was good. Now look at my intraday margin now is zero, right? And that's immediately freed up to make another trade. So as an example, in futures trading, you could sell a contract instead of buy a contract. So there's no uptick rule. There's no pattern day trade rule here. I just click on my trade ladder at a price I'm interested in, and I'm going to throw a limit order in to try to sell a contract at 47.05. And then if we're filled on that position, you'll see my intraday margin is now $500 again, right? Because I have this limit order here, and the potential for it to be filled is requiring a $500 commitment. Again, it's money that's in my account. It doesn't move out of my account ever. It's just kind of an accounting measure to keep track of how many positions you could have on at a time based on your account size. And so I could just, I'm going to bump this up to 2 contracts. And you can see the intraday margin is doubled, right? It's all multiplicative math. It's all very easy. Now I'm using $1,000 in my day trade margin. Thank you, John. Appreciate that. We'll wait to see if we get filled there. So Joseph, I think a pathway for a lot of folks is take the 14-day free trial, then open with a smaller amount of money and practice on the micro. Remember, the micros are all 1/10 the size smaller. So you're practicing with real money. You're getting the psychological effects of trading real money, because there's a big difference between sim trading and real money trading. And it's mostly, all of the demons that go inside of our head, right? Fear and greed, serotonin, dopamine, all that chemical process, FOMO, fear of missing out. So there's a benefit to trading the smaller size contracts gingerly after you take the 14-day trial, and the trial is really for learning how to use the software, the mechanics, and then looking at the flow, coming up with the trading analysis technique. And I'll tell you what mine is a little bit later. So that's what I would suggest for folks that are a little intimidated, but want to get involved. Racid says, is it useful to make a stop loss all the time, even when the market's too volatile? 100%. Best practices is make sure you have your stop in, even if it's a catastrophic stop, right? So right now we don't have one in, right? So right now we're short here. The trade's going in our direction, and so the first thing we're going to do is we're going to put in a profit target, and I'm going to pick a price at 99. I'm going to go down here and just click on 99. And then for my stop, I'm going to go ahead and say, you know what, I want my stop to be back where I entered. And since it's going to be a buy stop because I'm short, oops, I made a mistake. I need to do 2 contracts. Easily done, because I have 2 contracts on right now. And I want to go ahead and put a stop loss in. You do that by, instead of left clicking, you use your mouse, you roll it on your mouse, and then you just hit the stop button. So there's the anatomy of that trade, right? There's the anatomy of that trade. Again, my thought is, my opinion was at the time the market's going to go down, and I would like to buy it back at a lower price later and make a profit from it. So Racim asks, can you lose more than your margin? Well, so your margin, you're going to lose whatever is your P&L. Margin just is kind of like, it keeps track of how big a position you could have, how big a position you could establish, and how big of a position you could hold overnight. So don't kind of relate those two necessarily to P&L. So from a profit and loss point of view, yeah, you could lose a lot, or yeah, you could gain a lot. They're two kind of independent things. Now, as you get toward the end of the day, many brokerage firms, if you don't have the initial margin to hold your position overnight, this would require $25,300 for 2 contracts in the E-mini S&P. Then your broker will ask you to get out of your position, and in some cases they auto liquidate your position. But getting into that position is a little reckless, and most of us won't do that. So Joseph, yes. So Joseph says, is there a tool that could help with the stop and the target profit, like 1-to-1 or 1-to-5? And he's talking about the risk reward ratio. Now, I'm personally not a fan of this, but if you just go ahead and you could use an ATM strategy, and you could predefine your profit target. Let's say profit 8, stop loss 4 as an example. It's for a 2-to-1 ratio, and then you can go ahead and place a trade that way. And I'll talk about that a little bit later. I'm not really a big fan of random ratios when the structure of the candle at any given moment is more important, in my opinion. But in any event, the answer is yes. Okay, so we got out of that. I'm going to get rid of this. I'm just going to click on it. I could do it here, or I could do it on the trading ladder, or I could just hit the close button. A lot of very nimble, really easy to get in and out of positions with the platform. So let's kind of move. I'm going to toggle over here, and I'm just going to click on the micro E-mini S&P. It starts with an M, and it's you'll recognize this platform. It's the exact same, right? It's the same market. It's just it's 1/10 the size. Ticks are 1/10 the size smaller. So let's go ahead and I'll just try to. I'm going to change my quantity back to 1. And we'll try to sell a contract at 47.40 even, and now I'm filled. And now you can see that the tick size is only $1.25 a tick, right? And so the intraday margin is only $50 instead of $500. The overnight margin, or the initial margin, is only $1,200 and $6,500. So I do have excess initial margin to carry this position over for if my opinion is long term, right? I want to sell this market. I want it to go. I think it's going to fall out of bed. I'm going to sell a contract here and hold it for a week, as an example. Red means I'm short. 1 is the number of contracts, and you can see my P&L moving in those little boxes. Okay. So on the chart, Lisa, to place chart trades, right click anywhere in the body of the chart, and you'll see these buy limit, MIT, sell stop, or sell stop limit. So I focus on the buy limit or the sell stop, and make sure you're on the right side, right, on that trade. But yeah, that's how you do it. And then above it, it'll all be sell. It'll be sell and buy stop. Below it, it's going to be buy and sell stop. So it's kind of smart. It kind of tells you what the deal is. Okay. And again, my unrealized P&L is $10 instead of $100 because I only have a micro on. It's all multiplicative math, pretty straightforward. Most commissions, J37, most commissions are deep discount. It just depends on which brokerage firm you're looking at. So whatever brokerage firm you're looking at, they'll be able to give you a rate sheet. If you have old, see if I can remember how to do this. Okay, yeah. So right click. If you're seeing trades that are painted on your machine, in other words, you'll see where you entered and where you exited. You'll see a little rectangle and stuff like that. Just right click. And then go to data series, scroll all the way to the bottom of data series, and under plot executions, click do not plot, or you could have markers, or you could have markers in text. Just to show you what that looks like, I'll just go ahead and add text and markers, apply and okay, and it'll show me where I actually entered at. right? Where my, what candle I entered at, it'll give me a price and it'll give me an arrow. So if you have a lot of trades, that might be a little cluttered. People might not want to see that. Dave, I'll get to that in a second. Okay, let's kind of move on here. We've kind of, it's 12:37 already, and we got a lot of work to do. Let's kind of look at the market analyzer. So this is the quote board, right? And I have just the market, or it's called the instrument. I have the last traded price. I have daily volume, and then I have the net change. And you could add a whole bunch of other columns on here, but I keep mine kind of tight, kind of simple. And I have mine broken up according to asset class. My first asset class is the stock index futures, which are some of the more popular ones, right? You can see the E-mini S&P or the ES. This is the S&P 500 over 1.2 million. The E-mini NASDAQ, almost 600,000. The Russell 2000 small cap stocks over 176,000. The Dow Jones 200,000. And then I have a couple of German stock index futures. The Euro Stock 50 is what, and the DAX. And that's kind of, I'm keeping track of those. There's others you could add here. These are the ones I just like to keep track of. And then underneath it are there micro the versions of the markets, right? So they got that, and they have an M in front of them. So micro E-mini S&P has done already 800,000 contracts. That's pretty good. The micro NASDAQ has done more volume than the classic E-mini NASDAQ. It's done over 1 million. Very popular. YM 159, that's the Dow, and then the Russell 2000. Again, is they're micro. They're 1/10 the size. Everything is 1/10 the size. Currencies. And by the way, on the equity side of things, there's a lot of benefits. Trading stock options, trading regular straight out equities, SPX. Leverage is a double-edged sword. Just be careful with that, but that's one of them. Because you could have a more efficient use of your capital by not you don't have to have a $25,000 pattern day trade account to do what we're doing, right? There's no such rule in futures trading. So that's a huge benefit, right? Because $25,000 to establish a pattern day trade is a lot of money, and you could literally on the future side of things, you could make as few or as many trades as you want. You could make one, you could make none, you could make 100, you could make 500. It doesn't matter. You can go long, you can go short. There's no uptick rule, right? And then with the day trade margins, you're not borrowing money like you would if you wanted to have a leveraged position in individual equities or stock options. You're not borrowing money from a broker, right? You don't have to do that. And these are very liquid markets, mostly, almost uniformly across the board. Some aren't, but most are. And you could express your opinion long or short. And the S&P 500, and NASDAQ and Russell and YM, they don't always move in the same direction. They march by different drummers. Tech stocks different than large cap, S&Ps different than small cap, different than the blue chips. So there's many different opportunities there. Moving down on my quote board, I have currencies, right? These are currency futures. These are Forex futures. These are not over the counter. This is one centralized market, right? And so let's just take a peek at, we'll just take a peek at the euro. I just click on that, the euro FX. So this is the euro versus the US dollar in the futures market. And again, one of the benefits is it's a transparent marketplace. You don't have an independent Forex dealer coming up with pricing. This pricing is, universal pricing through the CME group, and trades are executed on a first come, first serve basis. You see the entire pool, liquidity pool here. And there's not another one. So with over-the-counter Forex, you could open up an account with 4 different over-the-counter Forex brokers and do 4 market orders at the exact same time, and you're going to get different prices, right? Because they're making up their prices. They're getting maybe a UBS feed into their platform, and they're kind of manipulating the data feed a little bit based on an algorithm to offer you a bid-ask spread that you could trade with. Here, this is more of a market-driven pricing. And again, it's transparent. You're in Japan, you're in Australia, you're in California, you're seeing the same thing. And trades are, again, executed on a first in, first out basis. So I'm sorry. There's no settlement process here. You know, if to go long and then go short, you know, liquidate a position, or short and then long, liquidate a position. You don't have to wait for a 3 to 5 day settlement like you do in over the counter forex. There's no carry interest if you're holding positions overnight, like there is in over the counter forex. So there's a lot of benefits, and all the majors are here. We have, you know, Aussie dollar, British pound, Canadian dollar, euro, yen, peso, New Zealand dollar, Swiss franc. And there's some minors available as well. I just don't have them all on my quote board. So a lot of benefits for that. And there's some micro versions of the currencies also. You got micro British pound sterling as an example, micro Aussie dollar, micro euro. But keep in mind though, when you get into contracts that have daily volume of less than 30,000, and 30,000 is a number that I just kind of made up, it's going to be it's going to be thinner, right? It's going to be less bid-ask spreads, maybe a bigger bid-ask spread. So be careful with that. Energy asset class, we got crude oil, that's CL, and this particular brand of crude oil is West Texas Intermediary light sweet crude delivered at Cushing, Oklahoma. And it's a very popular market for traders. It's one of the 3 benchmarks, right? You got Brent crude, also you got Dubai crude, which is sour. But this is the lighter the crude, the more attractive it is because it's easier to distill and convert into gasoline. From a refinery point of view. So crude oil is a micro crude oil. There's a natural gas I have on my quote board that's NG. There's unleaded gasoline that I don't have. There's a couple other ones that are also tradable in the energy complex. And then going down to metals, you got gold, silver, micro gold, copper, to name a few of them. And you know, gold's very popular, as well as silver actually. In the futures markets as well. Then you have the entire yield curve. You have the ultra bond, the treasury bond, the ultra note, the treasury note, 10-year, 5-year, 3-year, 2-year, and Fed funds. So you have the whole entire yield curve that's tradable from a futures account. And I started my career in the ZB, and it's still we had about 283,000 so far today. Not bad. And that market's still going strong. But it's electronic. There's no more pit. It took away my pit. John, yeah, you could sim trade you could sim trade if you have a live money account, and most brokerage firms let you do that. Cryptos, micro Bitcoin, Ether, big Bitcoin. You know, they're starting to become popular. They're still really in their infancy. They're pretty much relatively new markets. And then you have the currency. You have the grains and the sauce, right? Corn, oats, soybean meal, wheat. You have cotton, coffee, sugar, and those kind of asset classes also. So with your futures account, you could experience or become an expert at, or focus on and trade different asset classes depending on whatever interests you. So Bitcoin is an interesting. I'm referring to Lafta's question. Do you have a Bitcoin option? It was told it's not centralized. So, but here's micro Bitcoin. Here's a picture of the micro Bitcoin. And it's, look at the bid-ask spread. It's kind of wacky, right? There's a gap. It's because it's not very liquid. Could you still trade it? Yeah, but you got to be careful because the bid-ask spread there's a big gap there, and you have to, in my opinion, make sure your limit orders and your stops are far apart. So you have to give yourself some breath. This market isn't really ready for prime time just yet. I'm hoping it would be, because think about it. You can't really go short Bitcoin easily. And maybe if you have an account with Kraken, you can, but with Coinbase, you can't. And some of the other ones, you can't go short. And not only that, to get leverage, you got to borrow. You could go short on some of the ones you can't go short with. You have to borrow from your broker, right? You're borrowing a Bitcoin to sell against it, and that costs you money too. Just like you would if you wanted to go short an equity, a stock, you have to buy it. You borrow from your broker, right? You're paying them money, and then you can go ahead and go short. So you don't have that cost or that hassle here as well. Hopefully that answered the question a little bit. Yeah, missile silo, there are some tax benefits. I'm not a tax pro, but 60-40 long-term, short-term capital gains instead of the ordinary rule that applies to other type of capital gains. Okay, so where are we at here? Go back to our position. Position is going against us. Unrealized is 37.50. Now, we talked about asset classes. We talked about bid-ask spreads. We talked about first in, first out. Let's talk about the charts right now. I had a bunch of questions on the charts, and these charts are NinjaTrader is a development platform, but more importantly, it's an ease of use platform. You right-click anywhere, and you get menus. You right-click on bars, you could duplicate windows. You have tabs at the bottom where you could add different markets. You could add more tabs. Same with the quote board. You could link things together like I just linked it together. My particular chart, I have a 10-minute candle chart. I have a oscillator. At my second panel here, I have an oscillator. It's called the Commodity Channel Index. And it's, it's a momentum indicator for me, right? It oscillates around the zero line. And it gives me information. It's delayed data, but not delayed data, but it's a lagging indicator. But it gives me information to help support my trade ideas. And then below there is a moving average cross. I have a fast moving average cross, which is the red line. That's a 6-period moving average. And then I have a slower moving average, which is the blue one, which is a 26-period moving average. And the idea of fast and slow is just, the shorter the period of your moving average, the faster it is, because it's going to change more in relationship to a slower moving average on any given bar because there's less data to average. That's all. The volume profile here, this is where the rubber meets the road here. Again, this in the trading ladder. You don't get this with other types of trading, right? You don't see, even in the equity world, especially not the options world, forget about the stock options. You don't get a view, and I'm going to make this view so you guys can see it better. You don't get a view of the entire market in one glimpse on one screen, right? There's different liquidity pools. Your broker on the equity side, the options side, are trading at different places. Maybe they're selling order flow. It's not, you don't see one thing. So here you see one thing, right? And I'm just going to change a setting here to make us, we talk about this on Tuesday, Wednesday, Thursday a lot. In extraordinary detail. So let's I'm going to go ahead and just kind of pull this up a little bit. So we're trading right now. Here's our market at 47.09. And you can see these histogram bars are growing as the market trades there. This is tracking volume, right? Since the open last night, that's another thing we got to talk about, 23-hour market price. But since the open last night, all morning, up until now, here's the volume that's traded at these different price increments. Each one of these histogram bars is equivalent to a point or 4 ticks. That's the setting adjustment I just made. And these will never shrink. They only get bigger, right? So as the market trades at a different price, it's going to accumulate volume, and it develops these nodes of volume, which gives us areas of interest, right? And so this volume, you certainly can't do this in Forex because you're only looking at one Forex provider. You're not looking at the whole marketplace, over-the-counter Forex, that is. And with future trading, you can. So the volume profile and the other volume tools in NinjaTrader are very powerful. In any event, so we use this a lot in our Tuesday and Thursday live trade setup events. We talk about how to develop areas of interest. This dark blue area here is called the value area. This is one standard deviation worth of volume. This gold bar here is the point of control. It's simply just the prices where the most volume is traded. It's the longest histogram bar. Light blue, prices above value. And you guessed it, light blue below is prices below value. So that's my setup. It's pretty simple. And then all the other tools like Fibonacci retracement and trend lines, you could add or delete as you go forward. You could duplicate this chart so you don't have to redo all the settings again. It's very easy. All that kind of stuff is good. All right, so some questions here. And I'm going to double check my notes here. No, trading Typhonian, these are not trading blocks. This is just volume. These are just where buyers and sellers did transactions. That's all. It's just tracking volume at any given price range. And you could set those to whatever you want. You could set it at tick per tick. You could set it at 2 ticks for a height of a histogram bar, at 4 ticks, whatever you want. It's just going to show you where relative price happiness has been throughout the day. Yeah. So to add Joseph says, can you show how to add a stop loss and a profit target to the dome again? Yeah. So a profit, for a profit target, let's see, do I have one in here yet? Or no, I can't remember. I guess we don't. All right, so cool. Let's do it. All right, so I'm short one, right? I'm short one. I want the market to go down. So I'm going to just pick a price here and I want to buy it back at a lower price because I already sold one, right? So I'm just going to move my mouse into the buy column and at this price. And again, I'm picking a random price and I'm clicking my mouse once, right? And it shows up on the chart as well. And it says, hey, Jim, you want to buy one at 47.02? It's like, yeah, if it gets down here, I'd like to buy one. From a stop point of view, the behavior is a little different. You have to use your mouse. You have to use the middle. Let's just pick 47.14. Again, it's going to be a buy stop. Oops, sorry, 47.14. And I'm going to click down on my middle mouse button. In my case, it's a wheel. I'm going to make sure my quantity is right, and I'm going to hit that checkbox. And now I added a stop order there. Does that help? So left click is limit order, right click, middle mouse is stop. I always find it easier just to right click on the chart and just pick one of these things, then move the cocktail stir or whatever this thing is around. Margaret says, use Control Z to link the two trades, Joseph. All right, so Margaret, again, Margaret was like co-presenter of the day this morning, and she is co-presenter again today. Thank you for that. All right, David asks, ask your broker. Hey, I'd like to add the currencies to my trading platform. And I think in most cases, they'll be happy to do it. I'm scrolling through some questions here. Devin asks, whose CTAs went off the rails there? I answered all of them. That's just my experience. So the P&L you're going to see right here in the little open box here. So if you could double click on it. Oh shoot, sorry. And change the setting, but I have it at points. And then same down here in the trading ladder. Missile Silo loves the ATM strategies. All right. Let's see. Let me scroll over to this other. I have a couple different chat boxes open. Sorry about that. Rasim, these trades are executed at the CME. Unlike some order flow sales operations, these orders, and you'll find this true for futures trading, are executed at the CME Group's Globex electronic exchange. These are going to be sent to the exchange back. You get a Globex control ID number, and that's how it works. No one's selling you order flow. There's no black pools here or any of that stuff. So Luke says, hey, what is that volume profile called on the left? From Facebook, Luke, it's called volume profile. But you'll find it on the NinjaTrader trading platform under indicators. You got to go down to order flow, scroll down to order flow, starts with an O, Jim, come on, order flow volume profile. And that's where you'll find the VWAP also, volume weighted average price in the order flow category. Okay. Yeah, David, or just contact Ninja directly. They could also help you. They have a lot of customer service people there. It's pretty flexible. All right, let me just check my notes here. We covered an awful lot of ground today. 23-hour markets, I think I mentioned that. Starts at 6 p.m. East Coast time Sunday, goes all night, all day to Monday at 5 p.m. Then we take an hour break. And then Monday night at 6 p.m., we start again. We go to Tuesday at 5 p.m., take an hour break. The cycle repeats itself all the way through Friday evening, and then take Saturday off, enjoy the weekend, family, friends, and then Sunday night, we start up all over again. So that's another kind of big advantage. You know, there's no regular trading hours or extended trading hours, and it gives you the ability to kind of take advantage of, or at least protect yourself in some of these markets. As an example, you know, NASDAQ is, you know, a market cap, kind of a modified market cap weighted index. And, you know, when Elon Musk tweets something crazy, you know, after dinner, it could move the NASDAQ market. It could move your NDX. It could move Tesla. But now you have the ability to participate in that movement because the E-mini or the micro E-mini NASDAQ is available to you. We already talked about margin money being freed up immediately. We already talked about day trade, swing trade, position trade. I think we got through our notes pretty good. I blew off the part about the Greeks and the Phoenician merchants. I didn't think we need to go back that far. Yeah, so Denise asked a good question. So I'm just going to go ahead and hit close just to flatten this all out. And I am going to kind of show you an example, right? So right now we don't have any position, and you could look up here and you could say, you know, my positions are 0, my account, no intraday margin. There's nothing going on, right? So what I'm gonna do, Desiree, is it Desiree? I'm gonna call you Desiree. I hope that's right. Would you explain the difference between limit order and buy stop? So a limit order is simply, you're saying, hey, I want to buy or I want to sell on a limit, right? So if I want to buy on a limit at 47 even, I'm going to click on my mouse on the buy side and say, hey, I want to buy a contract on a limit order at 4,700 even. And the definition of a limit order is at my price or better, right? And I'm behind 121 other contracts in line. And as that line gets shorter, if the market starts trading at 4,700, that line will get shorter. I'll get closer to the front of the line. And then when I'm at the front of the line, then maybe I'll get my fill. And you will get your fill unless the market then bounces back up and you don't get your fill. But however, it can't go below you. It cannot trade at 99 3/4 without giving you your fill. So in essence, you're kind of blocking the market, right? Could it trade at 4,700 and then bounce back up and you don't get your fill? Yeah, it happens sometimes, but more likely you will get a fill, and you're basically pegging a price. I want 4,700 or better. This market's so liquid that you're not going to get better. You're going to get 4,700. At the same time, I could do a limit order to sell a contract. Let's say at 4704. I click once. I'm behind 87 other contracts, and I'm saying, hey, I would like to sell them. These are limit orders. I like to sell at 47 even or better. That's the definition of limit order, right? Can't give me a worse fill. And so I could wait. Now, once I get filled, I could put a stop loss in. So let's speed up this process a little bit. I'm going to go ahead and just move my order up to the market and try to get a fill right away. And all right, so now we have a position, right? We just bought a contract. So now I want to place a stop order, right? because, hey, I think I'm right. I think the market's going to go up in price, and I'm going to sell it back at I don't know, let's say I want to sell it back at 46 even. There's a profit target. It's my limit order, right? I want to sell it back up here. I already bought it down here. I want to sell it up here, right? So there. Now the last part of this puzzle is placing my stop. I might be wrong. This market might break down, and I want to kind of, the best that I could do. I want to kind of, I want to admit defeat at a certain point and say, listen, if this market gets down to 4,700, I want to get out. So since I'm long, I'm going to do it on the sell side because I would have to sell a contract. I'm going to use my mouse button. I'm going to click down on my mouse. I'm going to make sure there's a 1 there, and I'm going to hit the checkbox. And I just put a stop loss in to sell a contract if the market goes against me, right? So now I have 2 sell orders in here, right? One for a profit target and one for a stop loss. Does that help? And it's really just, it's the anatomy of every trade. I have to, it's a protective stop in this particular case. Sometimes you're going to be wrong, and it's comforting to be able to kind of define where you're wrong at. John asks, what's the relationship between the futures price currently at 02.5 and the S&P 500 cash price? I think you're assuming at 12.26. Well, that would be a difference of $9.24. I'm just kidding. I know that's not what you're asking. So there's in futures. Remember, there are contracts that in this particular market they expire every 3 months. They expire every 3 months. And because of that, when you hold a futures position, there's a cost of carry involved in holding that position. And that's why the pricing is different, because of that cost of carry or the interest associated. It's implied interest. It's not interest you're paying or that's coming out of your account in any way. And as we get closer to this contract period ending, then those prices will converge. And then, but what we do as futures traders is we just trade the next contract month, right? So now we're trading March, which is that 3 that you see. It represents March. And then we're going to be trading the next contract month will be June, which will be 6. And you'll know way ahead of time when it's time to start trading the next contract month. Okay, so the sell stop order I just put in there is a market order. It'll behave like a market order. So once doesn't behave like a limit order, this purple order, once this gets filled, if the market touches this price, it triggers this sell and it behaves like a market order. So I'm going to get whatever the best available price is at the time. It could be a tick higher, it could be the same, it could be a tick lower. It just depends. So that's the behavior is different than a limit order. I think your question is, oops, I'm sorry. What a stop limit is, it basically gives you a range of where you want your stop to be. So I just do stop market. It's easier, less grief. That's the difference between the two. So my stop in this particular case, Desiree, is on the sell side. This is the buy side. This is the sell side. I'm long. I bought one. So in order to get flat or to cancel my position, right, on +1, I want to have a -1. So I have to sell one. The question is, am I going to sell it as a profit, or am I going to sell it at a loss? Sell side, buy side. So anyway, I think that's the best way to put it. All right, what time is it? Oh my God, it's 1:07. All right, so we've gone overtime. King Koopa, right click, and then add order flow volume profile. If your version of the software doesn't have it, ask your broker how to get that version of the software. order flow volume profile. Add that, highlight it, hit the add button, and you'll be good to go. John wants my email address. Dare I put that up here? I'm kidding you. I'm joking. Of course I will. Jim.Cagnina@NinjaTrader.com. I do want to remind everybody trading futures options on futures involves substantial risk of loss, not suitable for all traders and investors oftentimes. In futures trading, you have a high combination of leverage and volatility, and although that could be an equation for risk, it's also an equation for opportunity. I said that backward. Although it could be an equation for opportunity, it's also an equation for risk. So be careful, only fund your futures trading account with risk capital and be ginger on the day trade margins. We were trading with in simulated live mode today on the NinjaTrader trading platform. Ben, come to our Tuesday, Wednesday, and Thursday live trading events, and that kind of information is discussed in detail. Ratios and all of that stuff, and what my point of view is, and how I like to think of it. Yeah, and again, ratio. Just come to Tuesday, Wednesday, Thursdays. Ratios are not for me. Predefined ratios are not for me. I want to focus on the structure of the candles, likely areas of support and resistance, in volume. So I'll explain how to do that. Missile Silo says, have a nice day, fellow futures traders. Bye-bye. Thank you for coming, Missile Silo. Everybody, thanks for coming today. Appreciate it. Hopefully we'll see you next week. Isabella just cut and paste our platform training schedule for next week up on the in the chats, so feel free to follow that anytime you want. And then lastly, let me leave you with this. Be safe out there and be good to each other. Take care.